This is your US presidential election special. Let's get into it. So hello and welcome to our most recent urgent market update video for Tuesday, the 5th of November, 2024. Now, this is our US presidential election special. We'll have a look at the charts. We will, of course, we've got this, we'll hopefully get a decision in terms of who is likely to be the next president of the United States. So we'll give you all the context around that, and we'll finish by looking at what potential outcomes are we likely to see off the back of this particular news event and what it means for the Fed and their approach to monetary policy, i.e. interest rates. Okay, so let's get straight into it then. We'll explain it in a little bit more detail. Please, if we can start, as we always do, with our risk warning, take a brief moment to familiarize yourself with our risk warning currently up on the screen. As always, be mindful about the risks involved in trading these financial markets, as always. Okay, so let's get straight into it then. So firstly, we will start with Forex Factory, and today, Tuesday, the 5th of November. So election day, congressional elections as well, which will be an important feature with this particular news event. So that's today, and the polls will open in just a few short hours. But also do bear in mind on Thursday, we've got the FOMC, and we'll be able to get a decision on the federal funds rate. So that is going to feed into this particular market dynamic. Okay, so at the point of recording, we understand it's pretty much neck and neck as these polls begin to open, with a large number of votes already in. So it does mean it's very difficult to come down on one side or the other. This is very much reflected in the actual markets themselves. If you look at just 6 major markets, the S&P, the Dow Jones, crude oil, gold, the euro dollar and pound dollar, you can see there's a bit of dollar weakness creeping in. Now that's quite interesting. That does suggest that at this point in proceedings, we are getting a bit of a market reaction. So we'll discuss that in just a moment. But broadly speaking, we've had 2 or 3 days of sort of volatile price action, really. Nothing to get too excited about. And it's very difficult for these markets to price in any kind of response when it is so tight. In addition to the markets themselves, we are seeing very, very slightly elevated bond yields. They're looking more constructive. So with the 2-year, we're pretty much where we were just a little while ago, just below these highs up here, but very close to those highs. And on the 10-year, we seem to be elevated again. We were as high as 4.36. So we're inching closer to new highs as we go into this news event. Now that will be important for reasons which we'll discuss in just a moment. So with this in mind, what are we likely to see and experience over the course of this particular news event, and which will include actually the FOMC on Thursday? So over the next 3 days, what we wanted to do is to just talk through what we think are the potential market responses, and hopefully do so in a relatively clear and easy to understand way. Now, just to point out, currently up on screen, these are potential market responses. It is important at this stage around all these major news events to be somewhat flexible in your thinking as a trader. You know, there may be reasons to go against these particular directional biases, because that's all there really are right now. So let's start with Harris on the left-hand side here. If we have a Harris victory, from our perspective, we're a little bit leaning towards a bullish bias for US equities. So will we get that rally? That would imply a little bit of a risk-on market dynamic, As a result, we'd be looking for weakness in the dollar, bond yields to soften. Harris, of course, is the continuity candidate, or the status quo. So bond yields, if we understand why the bond yields have been rallying since the Fed cut rates 50 basis points, something like this might sort of ease those tensions. Gold, we'd probably expect to soften ever so slightly at current levels. And the impact on inflation would certainly be less than it would be with a Donald Trump victory, which means that the Fed could probably look to cut rates to a lower level than perhaps if we get a Donald Trump victory. So that's a little breakdown of I suppose, the direction and bias that we would have in all of these different markets. Now, with regards to Donald Trump, if he's victorious, we're probably leaning to more so on a bearish impact on US indices. We've got the American first, we've got the tariffs, which might impact corporate bottom lines, and there's a bit of anxiety really about Trump policies over the next 4 years. So we're certainly leaning a little bit more to the bearish dynamic. Now, that doesn't take into account any kind of surprising announcements regarding tax cuts and anything else that might be quite stimulative for financial markets. So we're only just leaning a little bit more to the negative side, but that could be, and that's why we really have an either or type dynamic when it comes to US stocks and indices. But regarding the dollar, we think there's probably a little bit more clarity around a stronger dollar, as we have probably more of a risk-off market dynamics. A stronger dollar, we'd probably expect those bond yields, which have been rallying since September the 18th, we'd probably expect some further upside as far as US bond yields are concerned. Gold, we'd probably expect to rally as kind of nervousness and apprehension perhaps takes over again, and gold is a good place to hide out. And the impact that a Trump victory would have on inflation, we think, would be to the upside, and not so much an upside impact on FOMC interest rates, but certainly perhaps the Fed may be unwilling or unable to cut as much as we would do if we had a Harris victory. So these are only potential market responses. These are only sort of loose biases which may change. Now, there's a third column, and that's around whether we actually get an undecided outcome. So it's neck and neck. There's there might be contesting certain jurisdictions and polling outcomes, and we were informed earlier that Donald Trump may announce victory prior to knowing the actual outcome, which is a bit of a trick. And this is the level of sort of US politics. So if we have an undecided outcome for a short-term period of time, we think that's probably likely to be more negative for US indices. As a result, that would be a risk-off market dynamic. It'd be more positive for the dollar. Bond yields will probably rally even more so just due to the uncertainty. Gold would rally, in our opinion. To what degree, not too sure, but certainly we'd be looking for probably a buy trade under circumstances like that. And also the impact that uncertainty and an undecided outcome would probably be a little bit more inflationary. It would be a bit more of a concern to the Fed. So we'd probably think that they probably couldn't cut rates as quickly as perhaps they may want to do if again they had a Harris outcome. So many variables to take on board, and there's just three sort of distinct outcomes which we need to take into consideration around this whole US election, and that's whether we actually get a Trump administration or a Harris administration. That's the first thing. Secondly, it's the makeup of the government. If we have a House and a Senate, how quickly will each individual administration be able to get their policies through government? If we have a stalemate with regards to any particular administration getting through their policies in a relatively timely fashion, that's probably the best form of stability for markets, believe it or not, because each administration will probably struggle to make any real progress. So under a dynamic like that, you'd probably expect the markets to take on a bit of a, they'd probably move on their own, moving back towards corporate earnings and the environment for corporates. So we have the actual outcome, whether it's Harris, whether it's Trump. We've also got the breakup of the or the makeup of the actual government that will be in power. And the third sort of important element to take into consideration is the impact that this presidential election has on the Fed and the FOMC on Thursday. So those are the three things to keep an eye out for. These are the broad biases that we would have going into that particular news event. So that just about concludes. You can see the price action that we're currently experiencing. There's a little bit more of a dollar weakness as things currently stand, and this is recorded on Tuesday afternoon UK time on the 5th of November. So a few hours before the polls actually open. And it's going to be fascinating over the course of tonight and the early hours of tomorrow morning to see where these markets will be at that particular point, and see if we can then identify some high probability trades that make sense to us, that we're willing to put and get involved in trading these financial markets. Okay, so that just about concludes then this particular urgent market update video. Of course, you may have some questions. Of course, if you do feel free to email us at support@thelivetraderoom.com, and we'll get back to you as soon as we possibly can. So on that note, thanks for joining and tuning in. Do join us for the next video as well, which will be out fairly soon. And if you are interested in learning how to trade the financial markets, you can access one of our discounted live trading and education bundles on our website. It does start from just $59 per calendar month, so it's good value. And you'll be able to join our live trade rooms every single day. For more information, just go to thelivetraderoom.com and do feel free to connect with us through our website if you need. On that note, guys, listen, thanks very much. Take care, and we'll see you next time. Bye for now.